Okay, April 30th, Sunday evening, 1 hour before the weekly close. Let's do the market outlook and plans for the week ahead. So let's go ahead and start off here with the news events. So on Wednesday, we have the FOMC, so definitely want to be prepared for that, potentially be de-risking some lower time frame positions going into that in anticipation of the whipsaw. A quick note I want to make about these events is something I've noticed is that throughout the past, maybe year and a half plus, that CT's been paying very close attention to events like the CPI and the FOMC. I have noticed that the volatility or the whipsaws on these events has slowly died off. So earlier on, I was able to place ridiculously wide spreads and somehow was getting consistent fills on these. I have noticed that my orders have been getting front run a lot, and that really just is because the volatility on these events is dying off slowly. So basically, we're getting less emotional responses from the participants where they're aping into positions and rapidly unwinding positions at the same time, which is creating those whipsaws that we're so familiar with seeing. So I just wanted to make a quick note around that basically if you intend to play the spread plays that I used to do on these events, that you really have to start playing them tight. And it almost gets to the point where it's really not even worth it anymore because the risk is so high when you do play these spread plays tight, because the risk of getting run over is so real, and you won't have time to react. Likely your API will lag during it too, so you won't have time to react. So really the spread plays are kind of out right now. I've gotten front run on the past two major events where I've only gotten small percentages of my orders filled, and it's been frustrating. So I'm going to be readjusting how I trade these events, is the TLDR of what I'm saying. So let's go ahead and move forward. Let's get into the benchmarks. Let's start off with the S&P. I'm probably going to skip over the NAS, even though the NAS is a little bit more bullish. They're representing ultimately the same picture, so we'll shorten the time and skip over the NAS. So with the S&P, the first thing I want to address is how we're shaping up right now. So the last week, the end of the week, we saw an extremely strong close on the indexes, both the NAS and the S&P. Rallying really strong, just straight up TWAP style. If you look at the lower time frame price action on Friday, closing out the week in a very strong fashion. So with that, we need to present a couple of arguments here. So the core thing I've been looking for would be the pullback to mid-range, where we can get support around the yearly VWAP, which overlaps with the HVN and a number of other supports down there. So basically, pullback towards 39 still remains to be the most obvious play for me. But I do need to present the argument that because the NAS is so bullish and looks like it wants to continue to trade up, there is always the possibility that we are actually accepting outside of this comp. So this is a really long comp. This is a year-long composite that we have now formed on the S&P. So acceptance outside of this, that's ultimately what this looks like. So we do have resistance where we're trading at around 42. So there is one more kind of line in the sand. But if price is able to get through that, through this HVN, through last year's VWAP, it's going to be a pretty easy trade all the way up towards 44 at this HVN, where we'll likely be met with some resistance, potentially all the way up towards 45 before the next kind of pullback. So ultimately, I think that we're going to continue this zigzag pattern upwards that we're seeing this year. So it's a matter of, are we breaking out now, or are we pulling back and buying the dip? That's basically the core of my thesis for the S&P. Nothing's changed from the last outlook. The invalidation for this is going to be loss of the composite. So ultimately, for a risk standpoint, 3,900 is the line in the sand for me, and then 38 is the definitive line in the sand for as far as the composite's concerned. If we lose 39, I'm looking towards 38, but really, I won't expect 38 to hold if 39 fails again. So basically, if 39 fails, we're targeting all the way down towards 36, 35. But I don't think that this is the likely scenario. I think this is the less likely one, but it's always important to be prepared for every potential way that things could play out. So that's pretty much it for boomer stuff. Let's go ahead and get into the corn. Okay, so a few things to address here. So as far as how a time frame goes, we're fighting for acceptance over 29K. So without getting into the nitty gritty on the details, basically we're fighting for this acceptance play. So these were my plays last week. Was either the rejection play, the acceptance above play, or the buy the dip play. It seems like we're fighting for that acceptance. I do want to be a little bit cautious around things. So my systems are telling me to bet on up, but there are signs of distribution that I'm seeing with spot. So that if I didn't see that, I would be fully bulled up and trying to punt as many longs as possible. But the signs of distribution have me a little bit worried. I kind of have that feeling that we're right around here, where we're getting ready to break down into my ultimate bid zone. So 26K or maybe is into the mid 25s still remains my ultimate buy the dip zone. If we get into there, that's where you want to do your final swing play for this trend, because if 25K fails, then we're trading a lot lower. I think that will, even if this doesn't work out as a macro swing play, it should serve as a bounce where you can get out with some measly profit. So as far as higher time frame goes, looking to basically hold quarterly VWAP in 29K region. Let's go ahead and zoom in a little bit. So continuing with what we were talking about there, we're basically looking for this composite from May 2022, that low to hold. We have a lot of overlaps between the quarterly, last year, last weekly. We don't really care about last week's VWAP, but basically the current quarterly and this 28.8 comp low is kind of the end all be all. Zooming in a little bit more, we can pay attention to the weekend comp that we have built. So we can take a quick look at this price action over here. So we have, I'm not exactly sure how I want to draw this comp. I drew it 2 different ways. With the price action, I gave it an extra day. With the TPO, I only drew it as a 4-day comp. Either way, it doesn't really change it too much. It's, high of 29.5 and a low of 29 roughly, regardless of which way you draw it. It gives you the same levels either way. So what I'm looking at here is how we're going to develop. So we got my classic, weekend comp with breakout attempt that the Paragon members are pretty familiar with now, just because this is a play that I've run back many times over. Unfortunately for the Bulls, it does seem like they had a pretty apathetic breakout attempt. As you can see, shorts got absolutely squeezed, but then we can see longs started to really chase. The longs got absolutely clobbered as we reaccepted back into the comp. So I really want to see us get back above this composite. So the daily close is, in about 50 minutes, 55 minutes, give or take. So I'm going to be paying very close attention to the fresh daily and fresh weekly VWAP as that forms in combination with this composite high around 29.5. Looking for acceptance over 29.5 to lean super bullish going into the week. So that pretty much covers it for the plans on the corn. The only thing I didn't cover is the invalidation. Pretty straightforward. If we lose this 28.8 region, then I'm bearish all the way down towards 26.25. So TLDR is I'm bullish until we lose 28.8. Simple as that. For more information, check out the Paragon group with the link below, where I cover everything from how I trade to how you can develop your own style. So my altcoin watch list needs to be edited a little bit, so I'll go ahead and share that with you guys separately. But what I have for now is still decent. So BNB, Binance Coin is one of the main things I'm looking at. So this thing, it seems like it's pretty much inevitable that this thing is going to break through this major 330 level that we have here. We have lots of tests. Structure is basically as bullish as you can get on higher time frame. Massive. Let's try to redraw that. We have a pretty fat HVN trading right below us too. So basically, invalidation below $330, or you could use quarterly. So there's so many overlaps for support here. So basically, if this thing gives you a little bit of blood, pulls back maybe 3-4%, it's probably a buy the dip event to trade up and smash this resistance right here. So out of all the big boy coins, BNB is definitely the one that I like the most. Render is another one. I'm not gonna pull up the higher time frame VWAP, but this thing looks ridiculously strong. I don't really like where it's at now for a buy the dip. I'd like to see it trade lower, but ultimately, this is a nice composite that we have built here with HVN. So your invalidation is trading below the HVN basically. So you do have your risk definition to bet on upwards continuation for this. I just don't like buying things that are extended like this personally. But this is one I'll be paying close attention to. Link was another one. It wasn't the strongest of coins, but it did come up into my setup. So this is, basically where I anticipated wanting to buy it. So I'll be paying close attention to this one. INJ is not one I'm super interested in. Basically, I do think that INJ will continue to bleed. So first thing is basically watching how we interact with the quarterly and the yearly band, and then watching how we interact with this HVN. So hoping to find support around here. where we did last time, and then reclaiming this HVM would be the all clear for risk on for me. So that's what I'm looking for with that. Cardano is another boomer coin I'm keeping an eye on. It's having a pretty rough Sunday here, but structurally this one was really good. So if it starts to get back above 40 cents, so get back above this HVN into this major supply zone that it's been rejected off of several times, get back above 40 cents, and this is a sender for sure. Woo was another one that I was really liking. The risk to reward's definitely there. The strength is definitely there, so we like the Woo. Last one I'm going to run through is Arbitrum. So Arbitrum is definitely shaping up for that next drive up, in my opinion. So, you know, the first bit of the parabola really played out, and we kind of pulled back into it. We're building a nice base here. So the aggressive play is to buy it within validation, you know, below the swing points right now. The safer play is to wait for it to reclaim the quarterly. The problem with these kind of shit coins is that once it reclaims that quarterly, that you're not going to have very much time to react. So, you know, I'd rather play it safe than sorry, so I'll probably wait for the reclaim or for it to trade down lower and give me a slightly better risk definition, just because, you know, personally, I'm not super interested in, you know, that kind of risk definition, you know, minimum of 9% on the stop loss plus fees and slippage. It's not really my style, so I'll probably wait for this one to start to trade up. But that's pretty much it. You know, Blur's in the same boat too, to be clear. So this was the setup that I gave on one of my more recent streams that, of course, I didn't take, but it's looking really tasty right now. So Blur's basically in the same boat as Arbitrum. Keep a close eye on Blur and Arbitrum. I'm pretty sure Blur, yeah, is just listed perpetuals on, yeah, right there. So Binance just listed perps. I've been charting on Bybit because that was the only place, but they just got the perps listed, and I read some fundamentals on Blur, which made me interested in it. So I'll be keeping a close eye on Blur, basically with the same exact kind of argument as I have with Arbitrum. Okay, so that's going to be it for the altcoins. These are going to, you know, GigaStrong, these are going to be the core ones I'm looking at. BNB, Render, you know, Cardano, and Woo, basically. INJ, I want to see it trade lower. Link is kind of my really safe boomery kind of play that I might be taking this week. We'll see. And then I still have two big booty coins that are looking really good. So, you know, we like the big booty coins. They're printers for us. So that's it for altcoins. So that's pretty much it for the week, guys. Good luck. Stay safe on FOMC on Wednesday. Cheers.